Dear journalists, dear guests, dear colleagues, members of the Council, the Association of Serbian Banks, I greet you all. Welcome to the presentation of the May 2014 inflation report. And I would like to give you a brief note at the very beginning. I'm here today among my team engaged in the activity of preparing the report. Usually I sit together with other members of the executive board, but this time I decided to be here at this table. But at the same time I wouldn't like us to discuss any other topics apart from those issues relating to the inflation report, and that's why I would like you to ask questions to my colleagues dealing directly with this activity. It doesn't mean that there are any forbidden questions, but there is always the time and place for some questions. We are usually best recognized by inflation, and people are still not sure that inflation is as it is. They don't believe that it is the result of true effort and true dedication. They believe it is the matter of representation, so to say. Before Mr. Branko Hinić greets you and before he starts elaborating on macroeconomic developments in our country, I will give you a brief overview of the report itself, and I will present the situation in the Serbian economy as well. Despite challenges created by the global economic crisis, last year the Serbian economy made significant progress in macroeconomic adjustment and continues along the same path this year as well. Inflation has been moving around the lower bound of the target tolerance band since October. In view of the weakening of inflationary pressures, as confirmed by stabilization of inflation expectations close to the target, it is likely that we will maintain price stability at the target level of 4% in the medium run. Though interest costs on external debt have increased, the current account deficit was halved in the first 3 months of 2014 from the same period last year, owing to the continued positive tendencies in foreign trade. Based on our estimate, the recovery of external demand and low domestic demand will lead to further narrowing of external imbalance in the course of this year, which creates a more solid foothold for the sustainability of the external position of the Serbian economy and the stability of the dinar exchange rate. The recovery of economic activity continues due to increased external demand. Let us recall that Serbia's GDP growth measured 2.5% last year and was almost the highest in the region. Yet, despite the expected recovery in the euro area, our major foreign trade partner, we expect the pace of GDP growth to slow to around 1%. Because the effects of increased capacities in oil and automobile industries are gradually wearing off, and due to excellent last year's agricultural performance. In addition, negative effects of fiscal consolidation and structural reforms on economic activity will inevitably be felt in the near term. However, fiscal consolidation measures and structural reforms are a must if we are to have sustainable economic growth. The new government is facing all but an easy task, which is to implement tough and swift fiscal consolidation measures and to reform the public sector, while at the same time employing its rather scarce resources to underpin economic activity and ensure growth in employment. Let me underline that economic policy measures announced by the new government show its commitment to fiscal consolidation and the implementation of long-delayed structural reforms, which has been recognized by both the domestic financial market and foreign investors. We expect these efforts to lead to the conclusion of an arrangement with the IMF as an additional guarantee to investors that Serbia is implementing a responsible and sustainable economic policy. This would help Serbia to adjust to changes in the international environment at the lowest cost and to become more resistant to potential external shocks. The NBS is cautious in monetary policy easing, aware of the risks emanating from the international environment. That is the weakening of global liquidity brought about by the abandonment of unconventional monetary policy measures by central banks of developed countries and tightening of geopolitical tensions. As negative effects of the above risks on the country's risk premium and foreign trade flows have failed to materialize, and the financial market has responded positively to the announced economic policy measures of the new government, the NBS cut the key policy rate to 9% at the May meeting with the aim to stabilize inflation at a low level. Finally, allow me to emphasize that we are obliged to take responsible measures, especially us at the National Bank of Serbia. We are responsible and we have to take measures and implement reforms in order to resolve the problems that we face as society. This is the only way in which we can create a healthy and prosperous economy that we aspire to, an economy characterized by low inflation, a stable financial system, and high employment. Thank you for your attention, and now I would like to invite journalists to ask for this expose so that you can present our findings to the public. And now I would like to pass the floor to my colleague Branko Hinić.
Ladies and gentlemen, esteemed members of the press and fellow economists, since we last met at the presentation of the February inflation report, inflationary pressures have stayed low and the external imbalance continued narrowing down. Year-on-year inflation revolved around the lower bound of the target tolerance band and measured 2.1% in April. Such inflation movements reflected several factors: monetary policy measures, low cost push pressure, weak aggregate demand, the drop in inflation expectations, and a stable exchange rate of the dinar. Until the end of this quarter, year-on-year inflation is expected to continue moving around the lower bound of the target tolerance band. After that, in the second half of the year, inflation will steadily rise towards the target, remaining, however, within the bounds of the 4 ± 1.5% target tolerance band until the end of the projection horizon. Based on our projection, GDP growth will be lower this year than in 2013 and will amount to around 1%. It is expected to be led by net exports, supported by the nascent economic recovery of the euro area, our key foreign trade partner. The contribution of final consumption, on the other hand, will remain negative and will be probably reinforced by the short-term adverse effects of additional fiscal consolidation measures. For the same reason, GDP growth in 2015 will also be lower than anticipated at the time of the February inflation report. The recovery of the euro area proceeded in the first quarter, and its growth prospects for this and the next year have improved. The euro area economy is forecast to grow 1.2% in 2014 and 1.5% in 2015. The gradual pickup in demand of the euro area should have a positive impact on both our economic activity and foreign trade. At the same time, inflation in the euro area remains well below the target. Given the risks stemming from an extended period of low inflation, ECB officials allowed for the possibility of further monetary policy relaxation, including the use of non-conventional measures. By contrast to the ECB, the Fed decided at its March and April meetings to proceed with the quantitative easing tapering. While the decision to start reducing its asset purchases in January had caused turmoil worldwide, inducing investors to sell the risky assets of emerging market economies, notably those running huge current account deficits, the reaction of global financial markets to the Fed's subsequent decisions was significantly milder. Nonetheless, the winding down of the US monetary stimulus continues to represent a potential source of heightened volatility for the financial markets of emerging economies. The still present geopolitical tensions over Ukraine have been also an important element of the international environment in the prior period. As the Ukraine crisis continues, questions are raised as to its potential impact on global economic flows. If the crisis takes a turn for the worse, Serbia will suffer indirect negative effects through the rise in global prices, primarily those of energy and cereals, that is, through disruptions in trade and financial flows, should there be a deterioration in the economies that we cooperate with the most. Further on, a potential increase in investor risk aversion and an additional reduction in their exposure towards emerging markets, Serbia included, would probably cause a rise in the risk premia of those countries and send depreciation pressures on their currencies. In early 2014, the dinar was under depreciation pressures generated by both global and local factors. Even though it was expected, the Fed's decision to start quantitative easing tapering triggered a temporary rise in the risk premia and ushered in depreciation pressures in all countries of the region, especially in the course of January. The pressures on the Serbian foreign exchange market were aided by the increased demand of energy importers for foreign exchange. The low current account deficit moderated these pressures, and so did the net sale of foreign exchange by non-residents as of mid-March, which led to the emergence of depreciation pressures. Judging that these pressures were only temporary, until mid-March, the MBS intervened in the IFM by selling, and from late March and in April by buying foreign exchange. Since the beginning of the year, the risk premia measured by the Emerging Markets Bond Index have declined across the region, and most sharply in the case of Serbia. MB for Serbia is currently at around 260 basis points, which is its lowest value since November 2007. Based on the preliminary estimates of the Statistical Office of the Republic of Serbia, GDP growth slowed down in the first quarter to 0.4% year-on-year. According to our estimate, This growth was led by net exports, while private investment and private consumption provided a negative contribution. On the production side, positive contribution came from industry and services, and negative from agriculture and construction. It is important to note, however, that the fall in construction was less steep than in the previous quarters. Net exports provided a positive contribution to GDP growth in the first quarter, as the growth in exports outpaced that in imports. The key impetus to export growth came from motor vehicles, while high agricultural yields last year continued to reflect on the exports of agricultural products. Another positive signal is that nearly all branches of manufacturing exported more in the first quarter than in the same period last year. As a result, the 12-month export-to-import ratio continued to improve, amounting to around 75% in March, its highest level ever. According to our estimate, the external imbalance will continue to narrow, and the current account deficit will fall to below 4% of GDP this year. This will be prompted primarily by the continued growth in exports led by external demand, that is, the recovery of our main foreign trade partners. At the same time, a drop in domestic demand during fiscal consolidation should bring about the deceleration of imports. Also underpinning our expectation of further narrowing in the external imbalance are developments in the first quarter, when the current account deficit was halved compared to the same period last year. Despite the expected recovery of the euro area, GDP growth is likely to weaken this and the next year compared to 2013. The weaker growth this year will be due to the wearing off of the effects of the supply-side factors which led the growth in 2013, that is, agriculture and the automobile and oil industries, as well as to the implementation of fiscal consolidation measures. Because of the expected fiscal adjustment, whose effects on GDP are bound to be negative in the short run, the contribution of household and government consumption to growth will remain negative this and the next year. However, fiscal consolidation and the announced structural reforms will open the room for faster and sustainable GDP growth in the medium term. Both cost push and demand-side inflationary pressures remained low in the first 4 months of the year. Though prices of primary agricultural commodities continued up, the costs of raw materials in food production remain low. There were no major pressures from import prices in the prior period either. The consumer price growth of 1.8% was mainly due to the increase in the special VAT rate and excise tax. Unlike headline inflation, which has been revolving around the lower bound of the target tolerance band over the past several months, core inflation has been moving within the band since October last year. It measured 3.3% in April. Let us remind ourselves that core inflation is a part of the consumer price index, which is most strongly affected by the monetary policy measures. According to our estimate, year-on-year inflation will continue to move around the lower bound of the target tolerance band in the second quarter. Though low, last year's base for food prices will contribute to the gradual increase in inflation as of the second half of the year, it will move within the bounds of the target tolerance band until the end of the projection period. Low domestic demand remains the main disinflationary factor. Its effect will be amplified by the announced fiscal consolidation measures. On the other hand, with the onset of the new agricultural season, food prices will generate a moderate inflationary effect. As assumed in the projection, following a very good agricultural season last year, this year's season will be average. This will bring food production costs back to their neutral level, while food prices will display dynamics similar to that of other components of the consumer price index. The projection assumes that administered prices will contribute around 2 percentage points to inflation this year. However, the electricity price hike has still not been confirmed, and in case it does not happen, the contribution of administered prices will be smaller by around half a percentage point, implying downside risks to the projected inflation path. 1 year ahead inflation expectations of the financial sector continue to move within the bounds of the target tolerance band. In March, the expectations of businesses also declined to the target level. From the aspect of target achievement, the impact of inflation expectations is now neutral, which was not the case in the years before, when they had an inflationary effect. The risks to the projected inflation path are associated primarily with primary agricultural commodity prices and developments in the international environment, and to a certain degree with fiscal movements at home. Based on the analysis of current and expected macroeconomic trends, at its last meeting, the MBS Executive Board decided to cut the key policy rate by 50 basis points to 9%. Looking ahead, further monetary policy easing will depend primarily on the strength of potential negative effects of external shocks on the country's risk premium and primary commodity prices, as well as on the pace and intensity of fiscal consolidation and the outcome of this year's agricultural season. The external environment is still characterized by uncertainties regarding capital flows to emerging economies, which amplified with the outbreak of the crisis in Ukraine. It is therefore important that fiscal consolidation be implemented, as well as structural reforms, mainly in the public sector, labor market and the business environment. This would strengthen the economic fundamentals, that is, this would create a foothold for sustainable economic growth, while at the same time increasing the resilience of our economy to potential external shocks. This would also open the room for further monetary policy easing. Thank you for your attention.
Do you have any questions? Valentina Nešić from Beta News Agency. What is the expected food price increase because of the average agricultural season? Thank you. As we have already said, we expect, because of the average agricultural season, we expect that these prices return to their neutral level, meaning that the price hike will not be high. In the coming period, the food price increase will be consistent with movements in the headline inflation rate. So this will not generate strong inflationary pressures in contrast to previous years. we can also ask the question about the validity of assumptions of an average season this year. We may say that this year's agricultural season may be somewhat more favorable, but it is still too early to assess the character of the season itself, and that's why it's perhaps also too early to assess the contribution of food prices in terms of inflation in Serbia in the coming period. But we can say that we expect no strong shocks coming from food prices, as it was the case in the last several years. Yes, inflation is the main topic. First of all, hello, but I have to ask you what you think about the measure concerning subsidized loans. We heard that banks stand ready to participate in the program, but this will be implemented only as of August, September. So when this will produce an effect on economic growth, and what will be the effect on banks? Thank you. We welcomed the news about subsidized loans, and especially, I believe you also have the data, especially because of the fact that lending activity since July 2013 has been in the negative zone, and banks, because of the risks that they are exposed to and because of the lack of quality demand, banks are not really willing to extend new loans. And subsidized loans would help us a lot to somehow bring the lending growth to a level which is not negative, but under the conditions that you have already heard in the public. Under the terms that the new subsidized loans do not go into the settlement of old obligations, and that they're not used by usual beneficiaries, from which we cannot expect any multiplied demand or a positive effect. We expect that by defining the criteria for the disbursement of subsidized loans, that the government will keep its promise, and it will somehow favor small and medium-sized enterprises, which are the most resilient and which contribute quite a lot to GDP in Serbia. And as for our central bank, we tend to support these measures to the extent that we are able to, but on the other hand, we also wish to remind of very high illiquidity in some entities which could use these subsidized loans, but perhaps they will not be eligible because of their receivables. And on the other hand, when it comes to subsidized loans, there are some unsettled liabilities of the government towards commercial banks, which of course cannot contribute to the establishment of relations of trust. This should be materialized as settled obligations. These are obligations of the development fund for subsidized interest. And I truly believe that we will never have a situation again when we have a new company appearing in the field of subsidized loans, a man who would be able, through some political bypasses, to create some new situations. But I will not talk about this right now, but I would also like to remind all of you now that the activity of lending, that is of subsidized lending or of any other kind of lending, including guarantees, support to exports and so on, all this should be done within the banking system. I was away for 2 days, and my colleague Veselin Pješčić replaced me, and I was in Basel at a very interesting meeting. The meeting was about some new products, financial products, and it also touched upon, on the sidelines of this meeting, we also talked about the so-called shadow banking or quasi-banking activity, as we say it in Serbian, when many institutions, including those established by the government, that they dealt with factoring, lending, and so on, whereas in fact these institutions were not financial institutions. And I do not favor any sector, I have to say, any segment of society, including banks, and I don't favor banks more than citizens and so on. I like order, and I have to say that banks should deal with banking activities because they have their own rules of behavior prescribed by the regulator, that is the central bank. They have required reserves, they have the obligation to submit reports. All those who don't have the obligations such as this one, they represent disloyal competition, or in terms of a quasi-banking system, they do not contribute to the introduction of transparent criteria of using money, meaning that subsidized loans are an excellent measure, and we believe they will underpin lending growth and, by extension, economic growth as well. But aiming to lend a helping hand, we have to act in a statutory way in accordance with regulations consistent with the activities of the European central banks and other advanced economies that we depend on. We have to be fair, and we somehow have to respect fair players as well.
Gordana Filipović, Bloomberg. I was wondering, what is the GDP growth rate projected for 2015, because you have not specified it in the inflation report? When do you expect that the government will achieve an arrangement with the IMF, and whether you, as the ECB and the Fed, are ready to take additional unconventional monetary policy measures? Thank you. I will start from your third question. What befits Jupiter does not befit a bull. It may sound a bit blunt, it's a bit more elegant in Latin, but I prefer speaking in Serbian. Unconventional measures can be afforded by the great countries, great forces, whereas the National Bank of Serbia sticks to its statutory mandates and powers and uses all the instruments and measures that make it sure that the National Bank achieves its primary objective, which is inflation within the plus minus 1.5%, low and anchored inflation of the financial sector, which is the one to be most called upon when it comes to the predictability and groundedness of the measures that we, as the National Bank of Serbia, adopt. We are not ready to take unconventional measures, because if we want to be a part of the European Union and if we want an arrangement with the International Monetary Fund, we have to take care about all the restrictions imposed by international rules and by the control mechanisms of those international financial institutions. On the other hand, when it comes to arrangement with the IMF, I will repeat once again that foreign exchange reserves are very high, notably those net foreign exchange reserves of the country. We are being very responsible in taking care of those reserves, and we do not need any additional financial resources in order to maintain stability, which would be, as a rule, a definition, which would be the reason for a precautionary arrangement with the IMF. So this is not the case. But the support of the International Monetary Fund depends primarily on the measures that will be adopted by the government, primarily in the domain of fiscal consolidation and structural reforms. In what directions the talks will proceed, whether there will be some other types of support, I still don't know, but I believe that you haven't missed what I said when I said that in the first quarter we had significant interest payments on account of loans already disbursed, and I would like you to state in your reports that the consolidated government deficit is at around 7.7%, and that 4% of this amount relates actually to interest payment expenses in respect of already disbursed loans. So this means that we need an arrangement with the International Monetary Fund. We do not need any financial resources because we are already burdened significantly by the payment of interest under loans disbursed. But the question was, when do you expect the government to achieve an agreement? Oh, we expect them to come in May. I will be quite open in saying that I asked Zuzana in Washington, when can we expect to see you in Belgrade? And she told me, we will come when Mr. Vučić, when the government invites us. I think that at technical level, you do not have to be physically present because we are in daily contact, we're in touch, we have conference calls and we cooperate. But when will they actually come and continue their work on stepping up the conclusion of the arrangement? I think this is more of a question for the government than for the National Bank. When it comes to the National Bank, we are fulfilling all of our obligations, but I guess that this relates to the adoption of amendments to relevant legislation by the end of June. And just as we were not able to give a precise estimate of GDP in 2015 because we did not know what were the effects of the amendments to legislation that the government will adopt. Along similar lines, the IMF cannot specify the details of its arrangement until it sees exact figures based on the effects of the laws that need to be adopted. The first third of the year was a kind of election period. Then we had the formation of the government, and in such an environment, foreign direct investment reached 200 million. So we have a kind of slowdown FDI inflow. But for objective reasons, we are not inclined to make any revisions to our projections because maybe this slow inflow will be compensated for in the subsequent quarters. We will also not revise growth projection for this year. We estimate that it will be around 1%. It's a very broad band, you have to admit, from 0 to 1%. But if you take into account that one of the largest foreign direct investments, the Southern Stream pipeline, has now slowed down due to the geopolitical crisis and the situation in Ukraine, you have to bear in mind that there are circumstances that we cannot affect. We can only estimate their effects, and once it becomes certain to what extent this will affect the percentages, we will surely publish them. Branko, would you like to add something about growth? In 2015, we expect 2% growth. Now we are aware that the situation has slightly changed. We are aware that the government has stated clear determination to implement fiscal consolidation and to ensure internal balance. Basically, this may imply new measures which could extend to 2015. Of course, we still do not know the details of these measures. This could affect domestic consumer demand and economic activity in the short term. On the other hand, we have also many positive signals when it comes to structural reforms and their contribution to the improvement of the business environment in conditions when you are on the path to the European Union, in conditions when you are expecting a recovery of the euro area economy. So for 2015, it is very important to specify clearly fiscal consolidation measures And based on developments in the international environment, we have to see what will be the effect of these measures on domestic consumer demand and determine whether they can be neutralized by the impact of investments and the increase in our exports. It is evident, it can be seen clearly from the chart in the inflation report that we see relatively strong risks to the 2015 growth projection, but this risk stems from the fact that we still do not have the details of fiscal consolidation measures which could be quantified in terms of their impact on foreign trade and economic growth. Thank you.
Zoran Danilovic from the Tanjug Agency. Mr. Bakovic, I will be brief. As for the announced package of the government of 1.2 million euros, if this is spent this year, will this push up inflation to a certain degree? Thank you. What are you referring to? You're referring to subsidized loans, yes? So according to our estimates, the amount of lending activity, level of lending activity would not push up inflation, given the rates present since last year, and now they are around -7%, 7.9%. It is not likely that credit expansion and entering the positive zone would impact on movements in food prices. What we expect from the subsidized lending program is to support economic activity. We would like to see this, and we do expect such an effect. Of course, there is always some kind of delay. It is very hard to say when this will happen, but within the next quarter, the program will be launched for sure, and the measures will be materialized in terms of the effect on economic activity. So there is always a time lapse, a time lag between any significant credit growth and an impact on economic activity. The impact will be felt, but we can think about its intensity given the negative lending growth rates in the current period. The program of subsidized loans should start as of July. And the effects on economic activity would be felt already by the end of the third quarter and the beginning of the fourth quarter. And at the meeting of the Prime Minister with businesses and bankers, I understood that the program will be launched at the beginning of July after the adoption of the budget revision, which would regulate the issues concerning unsettled liabilities and government interest and so on. I would like to add something. So what is positive, as far as I know, is that two banks with a significant share in the total banking sector in Serbia have expressed their wish to support subsidized loans with their loans, and it is unusual that nobody has asked a logical question today. So we are waiting for subsidized loans at the moment when we have a high liquidity of banks. But why banks do not extend loans to businesses, to good business projects at the moment when they are complying with our requests, significantly reduced their deposit rates, and on our part we have also reduced the costs to banks through our regulatory measures to the extent possible. So this is is in line with the activities implemented by the ECB, the EU, and why banks don't engage in the traditional activity of lending to the economy, and we're only waiting for the government to subsidize the loans and for banks to add some funds as well. I believe that the times of normal behavior and normal business activities has come, and we need to talk openly about the costs of bank services and activities, and banks have a strong association, but anyway, banks are strong because they have money, whereas on the other hand, citizens are not so strong through the associations or otherwise, but banks exist because of the citizens, and the banking system extends loans to loan beneficiaries to citizens, for example, those who work, those who have a durable source from which they will repay their loans. So why am I saying this? At the meeting in Basel that I attended, I wanted to say that the cost of using the credit card is very high. And at the meeting of governors of the world, they came there, but there are also economies similar to our economy. And do not mention the risk perception, very specific and so on. There are many countries that resemble Serbia, and nobody has a higher fee of 3% on credit card use. And the topic of the conference was the Bitcoin, a new currency which is a threat to the payment system, to beneficiaries, to the central banks, because people somehow evade, try to circumvent the regular flows, and in Serbia this costs 5%. On the other hand, you have a market-based system, and as a regulator you can't affect the business policy of other entities, but you have the right to familiarize the citizens with the costs of services offered by banks, and we all have the right to ask, why are we waiting for subsidized loans? Why don't banks extend loans on their own, not to anyone and not for any reason, but for some well-defined projects, because we have this resilient economy in small and medium-sized enterprises, and they are exporters. You can't see them as important players such as Fiat and so on, but there are many small enterprises recording significant FX inflows, and they do function in this forest of regulations. So I just want to ask some logical questions, and somebody may say, for example, if you ask a normal question to a bank, they may leave, they may get angry. I don't want to hear such excuses. You know that the National Bank of Serbia spent last year 7.2 billion dinars for repo operations by paying to banks the excess liquidity that was comfortably sitting with us. And we can't abolish such, we will not abolish such instruments of facilities and repo operations that exist in the world, but we are not so significantly different than Jupiter or the other extreme. When I shouldn't ask a question to all of us, should we direct some entities to their real activities? So, for example, or I will say, if you don't have money to buy me an expensive watch, I will leave home. So our country has 4% out of 7.7% of consolidated deficit. So this is our interest debt in terms of earlier taken loans. And for example, if some banks share the destiny of society, and some banks very easily trade and do their business, and when we talk about the refinancing of government securities, and when we talk about the employment of the people who need to assess the credit worthiness of loan beneficiaries and who need to assess other factors, whereas other people may say some of these bankers are very clever and they receive high bonuses, whereas the others have to think about the instruments of collateral, the quality of collateral, regulations as well when the collateral has to be collected, and so on. So I'm asking from this position now, why only subsidized loans? Because banks are well familiar with the situation in this market. They know that there are high-quality clients, but I also bear the risk for saying what I said. You also bear some risks. Life carries risk in general, and banks operate on banks rely on trust, and they operate at the degree of risk, and they have to bear this in mind as well.
One clarification, please. This does not concern what you were saying today, but when you were delivering a speech at the military academy about the exchange rate applied in the calculation of loans, what remained unclear was whether your proposal for amendment to the law on consumer protection will relate to the same nominal exchange rate at the time of loan approval, as it was interpreted by a part of the public, or does it relate to the middle exchange rate, buying or selling? I was saying that the law on the protection of financial services consumer protection protects the clients in the sense of the exchange rate applied at the approval of loan and charged during the repayment of loan installments, only for those liabilities contracted from the date that law entered into force. But the clients whose liabilities fall due until that day when the law entered into force, they remained somehow without the legal protection. So we are not trying to be retroactive here, but we are planning to propose an amendment to the law on the protection of financial services consumers, where from the date of entry into force of that law, for liabilities falling due under earlier loans, we will apply the same treatment which is defined now by the current consumer protection law, and that is the middle exchange rate. Or maybe we will even propose that it will be a more favorable exchange rate for the client. So there will be no retroactive application of the law, but we will propose this amendment as the National Bank of Serbia. Of course, the Parliament is there to decide, to make the final decision, but I really think that clients should be treated equally. Thank you very much for this question. We issued a statement by which we tried to clarify this, but it seems that the public didn't understand it. So thank you for asking it again. So if there are no further questions, thank you for your attention.